is up, everybody? Welcome back to another episode of Benzinga Live. And the market is kind of ripping here. The S&P 500 broke out of its range yesterday for the first time in a while. And today, continuing to move higher. I'll go ahead and get my Benzinga Pro pulled up and we can look at some charts. And as always, let me know in the chat what stocks you guys are watching. In our top headlines, we have Alibaba reported earnings this morning. We'll take a look at Alibaba's chart, how that stock is performing after the company reported. Moving lower, actually, after this morning pre-market. When we were on pre-market prep and the call was going on, the stock was moving higher. But since then, it's taken a drop down to the 80. It got all the way down to the $85 level, down about 5.5%, 6%, and has since come back up a little bit, but still trading lower. And then as far as what's driving the market higher today, you have big name U.S. tech stocks. So Amazon, Apple, Microsoft, all up today. Oh, sorry, I didn't realize my BZ Pro. You know what? I'm gonna do something crazy we're gonna have to go. We're going dual computer today. Dual computer. Oh wow. My PC is giving me options to try Bing and Chat GPT. I guess like in my computer somehow. Don't really know how that works. I'll have to explore that and get back to you guys. SMH at 52-week highs. Hola, what up, Raz? I think that's a different Raz than we have. All right. This is why we need to go dual computer. Now I've got my charts up here. SMH we want to look at. The Van X Semiconductor ETF up 3.4% today. I mean, the semis have been by far the clear winner since ChatGPT came out, since AI became the hottest thing in the investing world. Semis have been the biggest benefit. I mean, look at NVIDIA up another 4.7% today, up to $316 a share. We're almost back up to all-time highs on NVIDIA that we were at in November 2021. And I mean, like, to put that into perspective, if you look at the Qs, look at how far off we are still from those highs. $400 on the Qs, we're at 335. Granted, NVIDIA's action and the other semis actions are helping the Qs get back up there, but the fact that NVIDIA is almost back up to its highs that it was at in 2021 is crazy. Apple, similar story, you can see right there. Microsoft, similar as well, but you know, it will be interesting to see if these things can break through and get back to those highs again. Yeah, shaking my head, missing it. I talked about it on pre-market prep this morning, but I've been wanting to add more NVIDIA to my portfolio, to my long-term portfolio, my Roth IRA, and I haven't yet because I've been like waiting for some sort of a pullback, and it's just not come. In fact, it's the opposite of a pullback. It's just continued to absolutely rip. I mean, this has been some of the strongest price action in any stock out there on the market over the past. Go back to this year. I mean, just year to date for NVIDIA. Someone put a guess in the chat. What do you think NVIDIA is up year to date? So from January 1st to now. It's May 18th. We're not even halfway through the year yet. Now it's up 5% on the day. Jeez Louise. Up to 317. So let's see if, I mean, like looking at NVIDIA's chart, going back on the weekly chart, you really don't have much overhead. I mean, like the last level that we're running into right now is the previous all-time high at 340. So this thing has now taken out, we're looking at a weekly chart here. You go back to March 2022, the stock hit $300 and rejected from there. Got all the way down as low as $100, which in hindsight, now that NVIDIA's up, you know, as much as it's up, $100 seems ridiculously cheap for it. But at the time, it didn't seem It didn't seem worth touching down there. NVIDIA up 114% year to date. Meta over 100. AMD next at 66. What a market to wake up to when I'm mostly not believing the move. By the time I get through my stupid brain, it might be late. Yeah, I mean, here's the thing right now, and we talked about on pre-market prep this morning. The market really, above all else, does not like one thing, and that one thing is uncertainty. And there was a lot of uncertainty surrounding, the debt ceiling crisis, and some movement looks like it may have been made there over the past couple of days. I mean, at least you have elected officials coming out and saying we're definitely not going to default. It's not going to happen, which I think has put some at ease. And then as well in the regional banking sector, talked about it a lot this morning on pre-market prep. Check out KRE today, trading a little bit lower, but if you look at your WAL Western Alliance up today, Pac West up another 8% today. What were the other ones we were looking at? CFR down a little bit. So I think when you take into account the fact, I think the move over the past couple days, you can basically say, okay, is A, due to the fact that some fear has subsided regarding the debt ceiling situation, and then 2, the fact that the regional banking crisis could potentially look like it could be behind us. Jay saying CMG Chipotle's at all-time highs. I mean, this stock has been a monster, and that's the thing about this market is whoever it was saying, or Raz saying they don't know if they believe the move. You don't necessarily have to believe like the moves the overall market is making. What's clear here is that there are certain stocks and certain companies, NVIDIA, Chipotle, Ulta Beauty, that are being rewarded. Their stocks are at or near all-time highs, which I don't think you see that in a terrible bear market, especially and I've talked a lot about this before, but if you look at XLE, you look at energy, and you look at XLF, how these things are trading in a recessionary environment, in a bear market, energy's usually getting crushed, and XLE's been hanging out. I mean, it's been doing better than a lot of other sector. I mean, energy was the best sector, up until a couple months ago, before the semis and technology really picked up and started to pick up some steam. But the fact of the matter is that you have these stocks, again, like whether you're talking in Ulta Beauty, whether you're talking in NVIDIA, whether you're talking in CMG, those companies are being rewarded. So I think it's just about finding these pockets of strength, finding these companies that you feel comfortable with investing for a long term, and knowing that, okay, I can hold through, right? Because when shit hit the fan and we started raising interest rates and inflation was crazy, I had a bunch of NVIDIA. I sold a bunch of NVIDIA on the way down, and for a while I was like, oh my god, I'm so smart. Say I sold it right here at $220. I was like, oh my god, I'm so smart. It went all the way down to 100, and I sold it at 220. Well, now it's a lot higher than 220, and I don't own any, or if at all, in my portfolio anymore. And had I just had conviction and held, I'd be up still. Obviously, NVIDIA is kind of an outlier in the market because the overall market still has overhead resistance. We talked about this with Anne-Marie Bain this morning, that we're still not out of the woods yet. It's going to be a cyclic bear market. Yeah, I mean, it is an interesting type of bear market that we had, because it was essentially driven by inflation, the fact that the Fed had to continue raising, and the fact that before that, everything was fueled by this zero interest rate policy, a lot of money in the system, stimulus checks, all these things, that it was kind of like these stocks were artificially inflated. So we almost needed that pullback, and we got it. And now we've been on the way back up, and a lot of people think that it's been too quick, too fast, and that we're not out of the woods yet, and that there might be another big downturn coming. You had Stanley Druckenmiller on CNBC yesterday, I believe, calling for a big pop of some bubble assets that still are out there. Speaking of bubble assets, how's Bitcoin doing? Bitcoin's hanging out there. Alrighty, guys. Well, I see our first guest of the day hanging out backstage, Mr. Steve Kalasian. It's been a few weeks since we've had Mr. Steve on the show. So without further ado, let's go ahead and roll that special intro and get Steve on the show. Mr. Steve, how you doing?
Hey, Aaron, good to see you.
How's the move going?
It's all done practically right now, so took a little time, but all done.
Awesome, glad to hear it. So what have you been watching? I mean, I know you're usually watching the overall market. Any names in particular that you've been playing either to the long or short side?
Well, more or less, you're seeing a lot of money getting put into these AI stocks like AMD. I mean, the stock had terrible earnings. Stock goes from 81 to 107, 105, 106, 107. NVDA almost up 200 points off the lows. I think the Qs are getting very frothy here. This looks like to me as like a bubble or a blow off. And the PE ratios are relatively still high in the 23.9 range, and to me this is absurd. The type of environment that we're in, everybody's betting on AI. I mean, Meta was trading, it rallied over 150 points off the lows. So you see, and I just think this is a blow off, and I wouldn't be chasing these stocks. I would wait for. I still think I was listening to a good friend of mine. He's saying that his model is showing 4250, and then the retest the lows of 3500 on the S&P. I couldn't agree more with that. I don't think we're out of the woods, and anybody who's buying up at these levels, I think, is going to regret it. I think that when you get these big rushed, obviously the put-call ratio has diminished. A lot of people turned bullish here. I don't think we're out of the woods yet. Yesterday, consumer credit hit $17 trillion. It's the first time ever. People living on their credit cards, and I think that we have a gigantic deficit, but you can't trade the market based upon those things. You have to trade what you see. Right now, I'm getting pretty frothy levels on my work, and I'm seeing sell divergences on the shorter time frames. I wouldn't be buying them here at all.
Yeah, I mean, so why do you think the market right now is reacting the way it is? I mean, we had this new news about the debt ceiling, etc. I mean, like what to you is causing this move higher?
It's a no-brainer. I mean, I heard last night, I forgot the number regionally before that, but I heard the number to be 102 times. 102 times was the amount of times they raise a debt ceiling. So if they do it again this weekend, it'll be 103. They're gonna come to some type of an agreement. It's just posturing right now. For me, I think that it's already into the equation. The market sold off pretty heavily this morning because one of the voting members mentioned that it's too early to cut rates. They're not cutting rates. They're going to pause. They're still three-tenths, almost 4/10 higher than their mandate, and that's going to take years. And if they keep printing money like that, you'll never get to that 2% target. So I just think that you trade them. I think that there's going to be something along the way here that's going to cause the market. I don't think the regional banks are out of the woods yet. These higher rates are really hurting them. There's 4,500 regional banks in the country, and I think 4,300 of them could be in trouble. So again, they will position when rates were significantly lower, and I think the trade went against them. And I think in June the Fed will pause, but I don't know if they'll raise another quarter or a half before it's over. But they're not cutting this year at all.
Yeah, so I mean, what if are you gonna end up playing the market to the short side? Are you waiting for the S&P 500 to hit that 4,200 level before you get
I,
in on
I
on the
I just
short side?
started buying some SQQQs for myself, the small positions right now. I'm going to build into a bigger position if it gets a little lower. I think we're overextended on the daily charts, so I just started buying some of my own account, and I'm going to wait for as it keeps moving up, I'm going to just keep adding to the position because I think ultimately the amount of where you are from where my moving average is way too overextended. You're $10 away. You have gaps below the market are like $50 away on the view. So this is gonna, I think we'll get some pullbacks here. This AI news is because they're thinking that AI is going to really prop up their earnings going forward. All this new ideas that are going like that, but you know, uh, I'm just looking at what I'm seeing here. This is like a frothiness. I mean, AMD goes from 81 to 107. NVDA goes from 225 to 316. And this is like the same.
Okay, you kind of cut out there for a second, Steve, but I think I got most of that. Do you think something like, would what could potentially happen with the regional banks for you, that would get you worried about that situation?
Well, yesterday you saw the KRE index up 6%. The Russell, which is heavily weighted in that, was up about almost 2.5%. Then today, the KRE index was down a little bit, and the Russell was down and then rebounded. Um, I just don't think these regional banks are positioned right, and the only way they're gonna salvage what they have is if rates come down significantly. If the Fed just cuts like four points off where they are now, that's not going to happen soon. Trust me, they're going to start cutting rates sometime in the first or second quarter of 2024. They're not going to cut now. So there's a lot of risk here for the regional banks in the next 7 to 8 months.
Yeah, that makes sense. What about, so are you going to short any of these individual regional banks? Like,
Yeah, in and out, in and out. Not just in and out. Um, I mean, this is crazy. I mean, the video yesterday, a couple of days ago, was just trading 288. Now it's 316. And I just think things. And look at Netflix. I mean, Netflix was up $28, $30 before. It's insane. Yesterday, Netflix was trading 328. It's just these moves are like a capitulation to the upside. I've seen this. I'm doing this 40 years, and I just this is not the environment that we're in. It's not a roaring bull market, and you still have high PEs. You still have significantly high interest rates, high inflation, and when the voting member earlier this morning said that she doesn't see rates to be cut here, it was a clear indication that she's still very hawkish. So she's a voting member. So I would be very weary. I think they're going to definitely pause in June, which would be a relief to the markets. But overall, housing. I talked to some real estate brokers here in the area. Things are slowing up. 17 trillion of debt, of 17 trillion, not billion. So people living on their credit cards. You're going to see defaults there. I just think this is just a mess right now. You have states that are going to go. I was listening last night. How many states are in financial trouble with, providing all the services for all the immigrants coming into the country? So this is just a bubble waiting to pop, and I wouldn't want to be long up here at all.
yeah, when would you expect the Fed to start, potentially cutting rates? How far away do you think we are on that?
Oh, we're about 9 months to a year away.
Okay, so you think like next spring, next February,
Yeah,
March might.
I would say definitely during the election year because I think they're going to use it as a political pawn as well. I think that they'll do whatever they can. Um, I think it's, look, you see what's going on with the news and everything being politicized. I think the Fed's not far behind, in my opinion. So I think they'll start cutting rates sometime, early spring of 2024, all the way up to the election.
Got it. And then what about, I mean, any other sectors? We've talked about tech. We talked about regional banks. Any other sectors that you feel like are either, prone to trade higher or lower?
I mean, energy is stuck in this range. I mean, well off the highs. 63 something up to 73. So oil stuck in this range. I don't see oil getting above 100. I think it's just stuck in this range. And I just think overall that when you're looking at the markets right now, I think, again, I don't like doing things in individual names. I like the underlying ETFs, like the Qs or the Spiders or the Diamonds or the Russell, or if you're looking at biotech names and whatever. But I think I like to play the ETFs versus individual names. And especially like if you become bearish, you could look at the TNA, the TZAs, the SDAOs, the SQQQs, and the STSs. So I think there are other ways to play the market if you're looking for reversals to the downside.
Yeah, I think go ahead.
Individual names, I'm not really one to like buy and hold or anything like that. I think there's more place to be in the underlying ETFs.
Yeah, I mean, right now, I think it'll be interesting to see because I mean, we are due for a pullback right now. I would say on the, especially on the tech stocks, on the Qs, on the S&P 500. But I'm curious, like, I wonder where that pullback is going to come from. Is it going to come from another regional bank collapsing? Is it going to come from some sort of fallout with the debt ceiling negotiations, or something new? And again, like I think a lot of people are you mentioned the put call ratio diminishing, but I bet there are still a lot of people out there buying puts right now thinking that, the market has to come back down to earth eventually sometime.
Well, we've been stuck in this range, 4,100 to 4,185.90 for the last 3 weeks, right? And I wouldn't be surprised if we get a blow off to 4,250, 4,280. And then, but I say to people all the time, like the eighth wonder of the world is how is S&P is above 4,000. I still can't get it with the PE ratio where it is. And I was talking to some people that have big financial models. Again, I'm not a model guy, so don't get me wrong here. But they're saying that a retest of the lows this year is going to be imminent. So I that's before I even thought what I was thinking. But I just don't see the market at these levels to be attractive. I think lower prices are coming, and I think there'll be much attractive prices for the future.
Yeah, I mean, I'm looking at some of these stocks. We have some crazy moves.
They're parabolic.
Look at this. I mean, Netflix is up 9.4% today. Netflix just absolutely ripping. On news that its ad supported tier is showing some strength. So Netflix up to the 370s level. Looking at a weekly chart, I mean, we haven't been up here. Looks like we touched up here back in February, but we're now back at April 2022 levels in Netflix. This thing got down to less than $180, now back up to 370. So up more than 100% from the lows on Netflix as well. So definitely got to see a pullback here eventually, right, Steve?
Yeah, I mean, the names that are obviously that are AI related are the names that you buy on weaknesses. Even if you get the significant pullbacks like the AMDs and the Amazons, and I mean these are the same. This is a crowded space right here. Everybody's piling in on the same names. It's only like 5 or 6 stocks that are fueling this, and so it's not the overall market. It's you look at Oxy, you look at Boeing, and you look at the other individual names. It's just the market's just following the suit of the Nasdaq right now.
Yeah, I think the fact that it's so top heavy, like you said, is concerning for a lot of people. I mean, you look at the IWM showing some strength today, but overall, you look at this weekly chart on the IWM, not a lot going on. Have you been looking at at the IWM or some small caps?
Yeah, I know. I mean, like some people are asking, like, what are the ETFs? You look at the SMHs. Um, so look, the pull-call ratio is 0.72. That's pretty high. Um, so basically, for me, I think, like I said, we're really frothy up here, and if we do get a push up to that 32, 42.50 on the S&Ps, I'd be more of a really big seller than a buyer. Even at these levels, if you're long lower, I'd be exiting longs here.
Yeah.
I mean, Netflix was trading what 331 yesterday. Look at it now. I mean, it's just insane where it is now.
Raz asking, can you repeat the
SMHs, I believe.
SMH?
SMH is the semiconductor ETF. Someone's asking.
That's the VanEck one. Yeah, that's the one that Jay Rice was saying was hitting highs earlier. But yeah, I mean, like you have the handful of stocks that are carrying the cues. But Jay, as Jay is saying, it's not just maybe 5 or 6. There's definitely a number, and a lot of it is AI related, but there's some that aren't. Right? I talked earlier about Chipotle hitting new highs today. So it looks like there are like some more value type. It's not all just growth in tech. I guess Chipotle is more also growth stock, not really a value, but it's not, high tech growth AI stock. What do you, so I guess like right now you're not short yet. You're waiting, or you're in and out of shorts, you said?
Just in and out of shorts. Looking for pullbacks on certain names intraday if the patterns are there.
Okay.
I think the
Well, what are
S&P
your, I mean, are you going off like signal? Are you going off
yeah, off my
levels?
work. Yeah, off my stuff. So I'm seeing a lot of sell divergences at these levels. So, but normally you'll get pullbacks off the sell divergences. But I know someone said it's not just 5 or 6 stocks. I mean, I'm talking 5 or 6 tech stocks that are really carrying the Nasdaq. That's what I should have clarified. Yeah, Chipotle, Ultra, other names like that, but they're not market leaders per se. Everybody's looking at the Apples, the Microsofts, the Amazons, the Metas, the NVDAs, the Netflixes of the world. You know what I'm saying? So when I say 5 or 6 stocks, it's what people really focus in on, more or less, and that's what's leading the Nasdaq up, and the S&Ps are following suit.
Yeah. I mean, right now, I think it's just people. I think people are so torn. I'm actually excited tomorrow to see the newest, like sentiment survey from the American Association of Individual Investors, because it's been kind of still people are leaning more bearish. That sentiment has been bearish. But it's pretty even right now. Like 33% of people are bullish, 33% of people are neutral, and 33% of
Down a
people.
lot. That's down a lot. Remember, we were in the 55, 60 bearish range, right?
Right. Right. And then it started to pick back up a little bit. More people were getting bearish. And then I think this week's action will probably cause. Actually, let's see if we can see it right now.
Well, we'll just wait and see. There's always opportunities each and every day. So I guess that's the most important thing to recognize. So what are we at now?
39% bearish. So yeah, you can see
down.
that's been coming down. More people. Although, look, that's weird. So people have gotten less bearish, but also less bullish. Last week, 29% of people were bullish. Now it's only 22. So interesting there.
Yeah, that's strange. Usually we reverse upward, right? If one comes down, the other one goes up.
That is strange. So I guess just more people are getting neutral. All right, well, Steve, thanks as always for hopping on. Hope the move in Florida's going well. Looks like you're enjoying it down there.
Thanks, Aaron. I'll talk to you next week. Thanks, everybody.
Of course. All righty, guys. That was Mr. Steve Collation. Make sure to smash the like for Steve. Always some great insights coming from Steve. What is up, Walter? How you doing? We're gonna have Rob Roy joining here in about 10 minutes or so. But I mean, holy cow, is this Netflix rip not just insane? I had no clue the stock was up 10% today. So this is going from the ad-based tier. Netflix's ad-based tier is basically like a cheaper version of Netflix, but there are some commercials on there. Other streaming services have this too, like Hulu. I know I think I don't pay for Hulu right now, but I think when I did, I was paying for the Hulu that still had ads. And it's almost like a no-brainer to me for Netflix because you're getting, think about it this way. Say Netflix, it has a one streaming subscription tier out there for $15 a month. That's going to price certain people out that can't afford $15 a month. Then Netflix comes in and offers a $5 a month subscription thing with ads. That brings in a whole new fold of people who were unable to afford it in the first place that now can afford the $5. So you just added a bunch of paying customers that wouldn't have been paying customers before. On top of that, you're bringing in extra revenue from the advertisers themselves, from the people paying for the commercials on Netflix. And then as you grow that tier, you get more and more active users on that tier. Then the actual advertisements themselves increase in value. So they can turn around and now that they have 5 million monthly active viewers and say, hey, Ford, you want to market your new electric vehicle? Why do it on CBS on cable when they only have X amount when we have 5 million people a month using this? And then I think too, what will be interesting with Netflix is because I think Netflix will be able to target people with certain ads in a much more effective way than traditional cable. So if you take a look at how Facebook, takes different data points to really have effective marketing and advertising based on this user data, I think Netflix will be able to do something very similar. Yeah, Jay, I know. I think, look, there were a lot of people that were doom and gloom. There are a lot of people that still are. I think there are a lot of people that just are kind of still like, not fully bought into this rally yet. I get that, Raz, that it goes against the model of Netflix, but it doesn't seem like this new tier is going to affect the way Netflix operates for most people that have it. Most people are going to keep their current plan. I doubt there are a lot of people ditching their current plan to switch for the cheaper one. I think companies, I mean, like Netflix, or sorry, not Netflix, but like other social media companies like Facebooks and stuff, like when you use them, you agree to their terms and services, and the terms and services all say, hey, we can use data points that you provide, like age, location, so it's like my advertisers on Facebook know I'm a 25-year-old male living in Michigan that likes to golf or whatever. So then they're like, okay, we can target this guy with ads from Callaway or whatever, so the Netflix would only do that if they had it in its terms and services and made it legal. Um, all right. Excuse me. Quick rundown for the rest of the show. Mr. Rob Roy will be joining us any minute. I mean, look at Netflix. It's just Netflix might take the crown from NVIDIA for being just the most resilient, unrelenting stock that's just on an absolute ripper. You've got what else we have showing a lot of strength. Meta kind of taking a breather. Whoa, wait. This isn't right, is it? No. Is this right? Why is... This chart looks weird. I don't think that's the real Meta chart. Why does it say Meta's at like all-time highs? It's not true. Meta was up at $360 a share. Something's wonky is happening on this chart. $86 plugins released for AI, new apps for ChatGPT. I mean, that's the thing is like I don't want to sound like a broken record. We've been talking a lot about ChatGPT and AI a lot, but I mean like I think it is. I think if you're not at least mentally prepared over the next like couple of years to just hear a new site, a new tool that's using AI to do X, to do Y, just new AI stuff like every day. Like I'm not saying that like all of it's going to be newsworthy, that we should talk about all of it, that all of it's going to matter for investing, but it's you're going to just hear about it like a non-stop. MD saying there's no stopping this train. I mean, it's here. It's going to be coming more and more. 86 new plugins today. There's going to be 180 new plugins 2 weeks from now. After that, even more. It's in my opinion going to look very, very exponential. I think it's going to get old quickly hearing about all this different AI stuff, because I think for the majority of people, AI, I'm not going to say won't impact our day-to-day lives. You just might not see it right. It might not be like tangible, way you see it. And then like next thing you know, 3 years from now, your GPS is going to automatically route you based on like, AI. I don't know what it's going to be, like everything. We've talked about this, but pretty much everything. And that's why I really, even though NVIDIA, AMD, Google, those stocks will experience a pullback at some point, if not like in the next couple weeks, the next couple, whatever. There will be a pullback in those stocks, but long term, I'm bullish all those stocks because I think, it's going to be someone, I forget, it might have been Dennis this morning, but basically like the internet moment, iPhone moment, if you will. And there's clear benefactors. There's clear companies that are benefiting from this right now already. NVIDIA is one of those. AMD is one of those. Cloud computing, I think, will be another one. So Amazon with AWS. Microsoft with, not just with Microsoft's OpenAI investment and other AI type things that the company is doing, but also through its Azure cloud computing. Also, I mean, I think that will continue to be strong based off AI demand. NVIDIA, of course, everything from your refrigerator to your dishwasher to your washing machine now to your car to your computer to your video game console is using semiconductors, using chips. AI is going to continue to increase the demand out there for these types of things. Raz saying AI and army things. Of course, yeah. I mean, these defense companies are going to be using AI as well. So it's just the biggest hot button. I mean, this might be more, it's like 10 times more than it was with blockchain or metaverse over the past couple of years, that now every single company out there on the earnings call, you're going to hear them talk about AI and how it's going to use AI. Jay Rice saying a bunch of healthcare names in the red. United Healthcare, I mean, this one, is this finally, like, United Healthcare might finally be over on its just, I mean, United Healthcare has been on just a mammoth run. MD saying Palantir. Yeah, Palantir is a stock I've never really. Although, I mean, look at Palantir. Palantir's been having a great price action the past couple weeks. Because last time I checked at this, it was like $9. It's up at 11.50 right now. Past couple days, just huge for Palantir. MD's long Palantir. So is Kathy Wood. Kathy Wood bought some shares as well. Maybe some more shares. I think she was already in it before. Can't remember. Excuse me. Alrighty, guys. Well, it is almost 12:15, which means I'll get Josh Brown on CNBC. It is almost 12:15, which means it's time for our second guest of the day, Mr. Rob Roy, joining us in studio today. Let's go ahead and give Rob a very special intro. When we come back, we'll be talking some charts, some options, some Fibonacci's, what we always do with Rob Roy, and it's always a great time. Mr. Rob Roy, how you doing today?
Aaron, I'm great. How about yourself?
I am good. We've been, I mean, the market's just absolutely ripping here. Well, I don't know if the overall market still is, but I mean, like some of these stocks have just had insane moves. Oh, wait. No, the market's doing the opposite of ripping right now. It's down.
Now, well, S&P, I think, is up a little bit still. I've got about 6.5 on the SPX.
Okay. It's still up a little bit, but it's well off its highs that we were at about 15 minutes ago. That's what happens, I guess, when I go 15 minutes without checking the market. I don't know. I mean, did a headline come out or something? Am I missing something?
Nope. If you look at my charts, it'll show you exactly why. It hit the 4181 fib level. That black line is a Fibonacci number. If you take the Fibonacci number series, start by adding 2 plus 3 gives you 5, 5 plus 3 is 8, and continue to do that, 4181 is that black line. We've had this on our chart now for a couple of years, and we ran and bumped right into it right here a couple of months back when we hit that recent high. We did it again a few weeks ago, and then today all over again, and it's just been a hesitation point. We have got serious times getting through there. I think this is probably our best opportunity too, but we've had some serious issues of breaking out through that level for quite some time now.
Interesting. Yeah. So, I mean, do you expect like a big move to the downside, just a little pullback, and then we'll start going back up? What's your read right here?
So we've got a little bit of a wedge form happening here with our 8 moving average, this pink line. We've kind of been moving up, right? I think we're going to press in there almost to an ascending triangle. And I think if anything, the pullback should steady itself between the 8 and 21, that pink and green, somewhere at the bottom of that. From there, I'm looking to see how we're going to get the break to the upside. That's really what I'm anticipating, is that breakout up. If it breaks to the downside, we'll play the downside. But I think that we've got a better opportunity for the upside breakout than the downside this time around.
Yeah, I mean, I think we were kind of range bound for a while. Yesterday, it looked like we were trying to break that range to the upside, and then today it looked like some confirmation, but now pulling back. So nothing. It's never easy for the market to break through these levels, huh?
It's not. And the funny thing is, most people have no idea about this level at all. They don't know it's there. They don't know it exists, but we fail off it. Why? Because it's a psychological level that it is here. You know something's there. You just don't see it there. Everything in life is based on Fibonacci, including the human DNA is made up of Fibonacci numbers, right? Everything about it, about us, about life. If it's important everywhere else, we should make it important in our trading as well. And that's what we do. Everything that we trade, you see, Aaron, every week, every chart we show has fib levels highly noted on there as the place that we're looking for either targets or bounces and so forth. I mean, great example was Netflix today, right? We took a trade on Netflix on that move to there. It was right to a fib line. And it exploded right off of that. I didn't expect the move, not like that. But everything is all about fibs.
Yeah, I mean, so what right now, I guess, if we do move to the downside, would be like a target, a fib to the downside level that we could bounce off of, and then maybe, same thing to the upside. If we do break through this level, what's the next one on the upside that we could run into some resistance?
So right now, if we're looking at targets, one of the things we can do, we've already got a Fibonacci established on here. We've got a nice deep drawdown over to this bottoming pattern in here, right? So if we look and we set up what's called an ABC, right? We go from where the fib started to where we completed our fib, that highest high right there. It has to go off a wick, so it'll never allow it to go anywhere but. And then we come down to that recent low. So we have A to B was 100% of the move, right? From this 37.64 up to 41.95, this blue line. The pullback down to 38.08 was a retracement. And now we want to measure 100% off of that level to see where we go to next. So if we look, oops, wrong one. Get the chart highlighted there. If we look further up, we're looking at 42.39 would be the upside target if we break to the upside, right? And what that does for us, Aaron, the movement from A to B is 100%. From this pullback to C, we extrapolate out or expand out 100% move again. It takes us to 42.39, 42.40 we'll call it. It's 42.39.81. So right up to about 42.40 would be our expected move up if we break to the upside. And if we push to the downside, we're looking at 40.75, which would be a 0.618 retracement of that and secondary move that we have in there.
Got it. Well, what you mentioned Netflix. What other stocks have you been trading?
So every day it's different. My top three right now have been Netflix, NVDA, and Tesla. I'm still sticking with those guys. We're doing really well with them. My Google shares are doing extremely well. I'm very happy with that. We're still getting really good premium on Amazon and on Google, even good premium on Tesla for covered call positions. There's still really nice naked put premium on some of them as well. But if you look at Netflix today, we had that gap up, and we gapped where? We gapped up, we pulled right back to a fib line. The Fibonacci level is 346.46. The low today was 346.37. So 9 cents down below that line, and it bounced. If we look at, see if I have it set up. I do. I've got it set up there. If we look at an intraday chart on Netflix, we look at a 1 minute chart, right? You could see that we gapped up. We had a tiny pullback on that secondary candle, and we just skyrocketed from there. So right about 347.5 or so, 348 was the entry point. And Netflix has skyrocketed. I mean, we did what did I do? 350s? Yeah, 350 calls. They were trading at about $3.50. We scaled at a summit 15, and right now they're trading at, last I checked, they were trading at about 21.5. It's probably about the same as what they are now. From $3.50.
On the Netflix calls, when did you get in on those?
So we got into 350s at about 3.5. And right now, I think I've got an option change still open here. If we look at Netflix 350 calls, right now they're trading at 22.90 by 23.45.
Holy cow, that's a huge increase.
It's tremendous move.
Nice. What are any ones you're seeing right now that you like?
So let me pull back and go to my other charts here. Apple had a nice breakout today. We've been waiting on Apple. The trade has been way too tight to try to take on Apple. We talked about this in our mastermind group the other 2 nights ago, where we were sitting right at that 172 level. So if we found a bounce off on this day, we'd get in about 173. But resistance was 174. So we had no room to move. So finally, we broke out of that 174 today. And if we can get a move, on this now to the upside, right, we're looking at 179, 178.75 is our next upside target. So I like Apple. I'd like to see it close here today, Aaron. Pull back towards that 174 tomorrow and bounce, and then we're looking at 179 as our upside target. I mean, for me at this time of the day, I've said this before here, I don't do a lot of trading 11:30 till about 1:30. I tend to back away from most trades, entering into most trades. I'll manage positions. And I'll go back after 1:30 and be done by 2:30, 2:45. If I'm not in a trade at that point, I normally don't take one. But then I'm looking right now for what's setting up for tomorrow, right? So what gives me an opportunity for tomorrow? Apple is definitely one of those.
Yeah, I mean, Apple is one that hasn't really been talked about with all the AI names, but I think it's like a given among a lot of investors that as AI develops, Apple will be a prevalent player in that space. But you know, the company reported, what was that, last week, 2 weeks ago? Pretty good report, but nothing crazy by Apple's standards. Do you think like Apple's just moving higher on strength of the overall market, or are there any other particular reasons from the chart that you're seeing?
From a technical standpoint, there's nothing that really sticks out to me that says that they should be moving higher. I think Apple is just, it's its own entity. It's its own exchange. We have the NASDAQ, the New York Stock Exchange, the S&P, and we have Apple, right? It is its own world. But this 174 level, that breakout was anticipated. We kept pressing into that 174. We're looking for the push. Moving averages were climbing higher, and we got that break today. But this strong and steady move, I mean, maybe it has something to do with someone had looked at it, might have been Kathy Woods the other day, that had said of the 1917 S&P, not SP, sorry, 1917 Russell 2000 stocks, Apple has a higher market cap than all of them combined.
Say that stat one more time.
Sure. If you took all the 1917 companies that are in the Russell 2000, Apple's market cap is bigger than theirs.
Holy cow. I mean, yeah, it's just an absolute. Apple's like revenue per year is like some small countries' GDPs. It's absolutely insane.
And their business model is spot on. It's not just, listen, they've created a tribe, right? Even some would call a cult of how people just buy their products, won't buy anything else. And I'm all for that, right? I love brand loyalty. I'm a big fan of it. But you look at, you familiar with Simon Sinek?
I don't believe so.
Yeah, he wrote a book called Start With Why. Start With Why. And he did a short, TED Talk. They're all short. He did a TED Talk about Start With Why. It's 15, 17 minutes long, on why most companies look at their customers, their work, their business, and all of that from the wrong lens. It's all about make the money. And Apple looks at it quite differently, actually opposite what everybody else does. And these are some of the things that they accredit Apple's success to. When Apple came out with their iPod, and it was not the first one out, there were other MP3 players out. They didn't care when other companies had better iPods, and the CEO was approached by that. This is better than the iPod. And he said, you're probably right. It had nothing to do with it. It was, they were building a culture of what people want and what people expect and how things work together. So they're a great company in and out. I mean, I'm a big fan of my own, some of their shares long-term as disclosure. And the same thing. I mean, you can get great covered call premium on a company like Apple. There's just great rental income on the shares if you're sitting on them.
Yeah, walk me through. I mean, because I think a lot of people out there, hear people talk about covered calls and don't. I mean, from a very basic, rudimentary standpoint. Say I own 100 shares of Apple. What would I do to write those covered calls?
So the first thing is you have to own the stock in 100 share increments. That's the most important thing that everybody needs to understand. You can't have less than that, and you can't have it in multiple accounts. You have to have it all in one account. And they are considered such a safe strategy. You can do them in retirement accounts as well. All right. So my option chain is not playing nice. There we go. Okay. So what I'm looking for, Aaron, is very simply, for me, when it comes to covered calls, I am a very short-term covered call trader. I look for the front week. If I'm trading them on the SPY or on QQQ, I look for today. I'm looking to sell the options for today. On a position like Apple, we are looking at a delta is the column we're looking for, and under the calls, and we're going to look for a delta of about 40. We really don't want to go over 40. Delta tells us for every dollar the stock moves, the option moves this much. So the stock goes up $1 and I have a 36 delta, the option will go up by 36 cents. If the stock moves down $1, it'll go down by 36 cents, right? And that's very rudimentary. It also is a probability calculator. It tells us what the chances are that that option will have intrinsic value, cash value, come expiration date, come this Friday, which is the 19th of May. Okay. So there is a 37% chance right now that come this Friday at 4 p.m. Eastern time, market close, this 175 call will have cash value to it. 40 is the delta that we tend to sell covered calls with. Now, if you own stock that you do not want to have taken away from you, I mean, you just can't. You bought Apple stock at 12 and you've gone through all of these splits and now it's at 175. You don't want to have that taken away. You would go with a lower delta. I'd probably be looking for something around 20, which we don't have anything this week on 20. So it's either 36 or 8, which is not, because where we are already today is Thursday, we don't have a lot of time left. Right? If we looked at next week's option as an example, just to go in there, we've got a 25 delta, right? So you would find that you'll get a little bit less premium, but there's less of a chance that someone will take that stock away from you. So right now for this week at 175, if I had a stock on Apple and I was writing a covered call today, I'm giving someone the right to buy that stock from me at $175 per share on or before Friday at 4 p.m. For that right, they're going to pay me 51 cents per share or $51 for the one contract to cover my 100 shares. And as long as the stock stays under 175, I keep the 51 cents and I keep the Apple stock. And then I look to go and do it again next week and the week after and the week after and the week after.
Got it. So even like if you do get stopped out, whatever, and you sell the shares, I mean, like hypothetically, you're writing calls at a price that's higher than the price that you bought the stock at, so you'd still be making money from that sale?
Correct. Correct.
Got
Assuming you bought them under that 175 price.
Yeah, so in this scenario, let's say you bought the shares at 150, so you would sell them for $25 share of profit per share, and 100 of them, and then, or it stays below, and then you just kind of get that premium that you get from writing the calls for free.
Correct. And then you just do it again next month and again and again and again and again, or next week. I usually only write covered calls any longer on weekly options. I don't do them on monthly positions any longer. If it has only monthly options, I won't normally write a covered call on it.
Yeah, just too long. All right. Well, Rob, thanks for joining the show today. Gonna go ahead and drop the Wealth Builders HQ link, or what is it? Trading Like a Boss?
Trading Like a Boss. Yep.
tradinglikeaboss.com. Gonna go ahead and drop that in the chat if you want more from Rob and the rest of the team at Wealth Builders HQ. Rob, thanks as always for hopping on Benzinga Live with us today.
You got it, Aaron. Have a great day.
You do the same. Alrighty, guys, that was Mr. Rob Roy. Make sure to visit tradinglikeaboss.com for more great info from Mr. Robert. All right, guys, it is 12:30. We're going to go ahead and wrap up the show here a few minutes early. I've got some articles I got to knock out as well as my newsletter. So I'll be back tomorrow morning on pre-market prep. Hopefully no snafu tomorrow morning. We'll be live in public right at 8 a.m. Eastern. So hope you guys join us there, 8 a.m. Eastern, pre-market prep. Woo! I'll be right here in this desk, in this chair, 8 a.m. on a Friday. So no going out on a Thursday night for me tonight because I'll be doing pre-market prep in the morning. Can't let Joel down. So yeah. Till then, stay green. Happy trading. Peace and love.
This is Ben